Welcome to MarketSnap's daily market rundown. The Fed held rates steady, but the real story today was the violent rotation out of everything AI related and into, well, just about everything else. It was a day where the average stock hit another all-time high, while the Nasdaq slipped into correction territory. Let's unpack that chaos. The setup for today was a perfect storm. You had the Fed decision, a massive oil spike after renewed U.S.-Iran hostilities, and a brutal sell-off in semiconductor and AI stocks that has been building for weeks. The VIX spiked over 20, signaling real fear, but if you looked under the hood, the picture was far more nuanced than a simple risk-off day. The major averages tell the story of a split market. The Dow Jones took the hardest hit, falling over 1,150 points, or about 2.2%. The S&P 500 was down 1.5%. But the headline grabber was the Nasdaq, which dropped 1.7% and is now officially in correction territory, sitting over 10% below its recent highs. The Russell 2000 wasn't immune, falling 1.6%, but the real action was in the divergence between the cap-weighted and equal-weighted indices. The S&P 500's decline was broad, but the internals were fascinating. While the index fell, the equally weighted S&P 500 actually hit a new all-time high. That's a massive signal. It tells you this isn't a market-wide panic. It's a brutal, sector-specific rotation out of the mega-cap tech names that had gotten overextended. And when we say brutal, we mean it. The large-cap losers list today was a graveyard of AI and semiconductor darlings. Vertiv Holdings, the data center infrastructure play, was the poster child, crashing over 17%. KLA Corporation fell nearly 11%, and Micron Technology dropped almost 10%. Applied Materials, Lam Research, and ARM Holdings all lost more than 6%. This wasn't a dip, it was a rout. But where there are losers, there are winners. The rotation was on full display. Garmin surged over 16% after a strong report. Teva Pharmaceuticals jumped nearly 10%. Energy stocks like Equinor and Eni rallied over 7% on the oil spike. And in a sign of where money is flowing, Accenture, Adobe, and Intuit all jumped over 5%. The trade is clear, out of hype-driven hardware into cash-flowing software and value. Looking at the mega-caps, the pain was concentrated. NVIDIA lost another 3.5%, bringing its recent slide into sharper focus. Intel dropped over 5%, and even Apple, which hit a new all-time high today, couldn't escape the gravity of the sell-off, closing slightly lower. The narrative is shifting from how much can they spend on AI to how will they pay for it. The weekly performance numbers are staggering. SanDisk has lost 30% in just the last 5 days. SK Hynix is down nearly 24%. Coherent, Astera Labs, and Nebius are all down over 20%. This is a full-blown correction in the AI hardware trade. The catalyst? Fears that hyperscaler capex is reaching a tipping point, with investors demanding more discipline and a clearer path to ROI on that massive spending. On the flip side, the weekly gainers list is a masterclass in rotation. SAP is up nearly 20% for the week. Accenture and Workday are up over 17%. Booking Holdings and Royal Caribbean are also strong. The market is rewarding companies with predictable earnings, strong free cash flow, and exposure to non-AI growth drivers. The macro catalyst for all this was the Fed. As expected, they held rates steady at 3.5% to 3.75%. But the real story was the dissent. 3 members voted for a hike. Chairman Warsh made it clear the fight against inflation is far from over, stating there is no soft inflation target. The market is now on alert for a potential September hike, especially with oil prices surging again on geopolitical tensions. Adding fuel to the fire, oil prices absolutely exploded. WTI crude soared over 7% after Iran launched attacks on U.S. forces in Jordan. This is a direct threat to the inflation narrative and complicates the Fed's job immensely. For long-term investors, this is a reminder that energy and geopolitical risk are never fully priced in. We are in the thick of earnings season, and the bar is incredibly high. Tonight, we get results from the mega caps that matter most, Microsoft and Meta. The market is laser-focused on their CapEx guidance. Any sign of spending cuts could trigger another leg down in the AI trade, while any signal of strong ROI could be the catalyst for a bounce. You can find exclusive earnings transcript summaries on MarketSnap. Looking at the sector level, the rotation is crystal clear. Over the past week, communication services and consumer cyclical are the top performers. Energy is the worst performing sector, despite today's oil spike, which tells you how much damage was done earlier in the week. Technology and basic materials are also lagging. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. Today was a stark reminder that markets don't go up in a straight line, and that the best opportunities often come from the most uncomfortable rotations. Stay disciplined, keep your long-term perspective, and we'll see you back here tomorrow for another breakdown.